Okay. Okay. Seem to be all set. Nice detail. All right. Hello, everyone, and thank you again for joining the live session. We are here with to do the Market Outlook series like every single Friday, where we will be discussing in details Nifty, Bank Nifty, and the Intersector relative chart. So this week has been very, very interesting. But before I start, today's voice might feel a little off because I just realized 2 minutes ago that I forgot to bring my mic because I'm traveling right now. I'm in Hyderabad for an event where I'm a speaker. So, bear with me. And the session will also end sharply at 4:30. So without much delay, let's get started. The structure is going to be the same like it is every week. We'll start with the smallest time frame of Nifty, go over to Bank Nifty, and finish off with the intersector chart analysis. If we have time left, I will be taking up some of your stock queries from your comments. Be sure to also mention your cost price. Okay. All right. Let's see. Okay, great. I was afraid that was going to happen. Give me a moment. There you go. Okay, so this is the 3 minute time frame of Nifty, as you can see there. That's the 3 minute time frame of Nifty. So, what are we seeing here? That since Wednesday's second half, right, we saw a sharp recovery in the index, and that recovery has taken us around 320 odd points up. But is this rally sustainable, right? We'll discuss that. So, firstly, in the 3 minute time frame, what I can see is that there is a negative divergence forming on the RSI, right? Now, we can see that historically the RSI of the 3 minute time frame has been a leading indicator of indicating a correction. Whether a small correction or a big correction, that indication comes from higher time frames. So we have one negative point already. I know nobody wants to listen to this, but we already have a negative point from the 3 minute time frame to begin with. Okay. So let's move on to the next time frame. All right. One more indication of this, one more negative point on the 3 minute time frame is the RSI negative range shift, which is basically saying that the last two bottoms, which were formed on RSI of the 3 minute time frame, had reached the level of 30. This is not very positive. And now, even though we've seen some rally, that rallies also pretty much brought the RSI back at the resistance level of 60, forming a negative divergence in the process. Okay, let's go one time frame higher, which is to the 15-minute time frame. On the 15-minute time frame, I noted last week also that there was a positive divergence. The unfortunate bit is that this week itself, basically between Monday and Wednesday, the problem is that Nifty forged a new low, and from that low, it has nearly given a rally back up to retest the previous swing high, which is nearly to the level of around 19,700. So, that being said, the previous swing high, which is this zone, right? This zone becomes a very important resistance for Nifty. So the index has to give us a closing above the level of 19,720, 19,750 to convince us that the market positive momentum is going to resume. Why am I saying this? Because, in my opinion, the support of 19,450 was very important. And the fact that that support got breached on a closing basis makes me a little bit worried. Okay. That being said, 19,200 is my ultimate support level, which, I believe is going to be the final determinant of whether we are officially, in my opinion, in a bear market or a bull market, bear trend or a bull trend. Okay. Why? Because why 19,200 is so important? Because if we look at if we look at the intermediate level swings in Nifty, that is where the previous swing low was watched. So if 19,200 gets broken, then that is real cause of worry. So basically, when 19,500 or 19,450 broke, that was the time to be very cautious. So what did I do? I stopped buying. I stopped making fresh entries, except for where the risk reward ratio was very attractive. When I say very attractive, basically where the risk reward ratio is more than 5. So usually my minimum risk to reward ratio is 3. But in this situation, in this region, when the Nifty was basically here I created new positions only in stocks where the risk reward ratio is very attractive, right? And I advise the same to my members as well. You know, my members of the Trade Together program, where I help people do swing trading. If you're interested, if you're a trader, a retail trader, and you would appreciate risk managed and capital allocated, like proper strategy based trading, then I'm dropping the link to my Telegram channel. Be sure to join that. But coming back to what I was saying, this zone basically, okay, this 19,500 to 19,200 is the danger zone for Nifty, okay. Below 19,200 though is like for swing traders, it's pretty much like game over, start sitting on cash. But if the market goes back above 19,750, then that's good news. Okay. That would be the proper assumption of rally. Okay. Even though the 3 minute time frame had some negative biases, my overall outlook of the market is still positive, subject to 19,720, 19,750 on bank on getting breached on a closing basis on Nifty. Okay. That being said, what we are seeing on the 15-minute time frame is that there was a positive divergence on the 15-minute time frame that I was holding on to. But what I can see is that Nifty has already rallied and can come to the level of 60. But price-wise, it has not even breached the previous high, which again is a little bit concerning, in my opinion, right? Coming to the 75-minute time frame. On the 75-minute time frame, what I can see is that the level of 40 was breached, which again is, like I said, a little bit concerning and not very comforting. But that being said, there is also the 500 EMA giving us support on the 75-minute time frame. And the 500 EMA is a very important support zone, as has been seen repeatedly in the past. Okay. So where does this, so this gray line that you're seeing that's the 500 EMA. And if you will see, it coincides exactly with the 19,200 support level, which I have mentioned, which reinforces the importance of 19,200 as an important support level. So we have two things that indicate to the importance of that level. There is a previous swing low and the 500 EMA of the 75-minute time frame. Okay. Now, so the reason why I'm emphasizing these points repeatedly is to tell you that even though what I am saying may sound a little bit negative, but there all is not lost unless the level of 19,450 gets breached on a closing basis. Did I say that right? 19,000. Actually, 19,350, not 450, 19,350. As long as that doesn't get breached, all is not lost. And below that also, 19,200 is the most important support zone. Okay. So what to expect the next week? Considering the weakness that we have witnessed in the 315 and slightly in the 75-minute time frame, my expectation is that some correction may still happen next week, and we may come back to retest the level of 19,500 on Nifty. Okay. With that being said, again, moving forward to the daily time frame. See, the daily time frame is still very positive. Why do I say that? If you look at the volume profile, what it suggests is that the volume was giving a pretty good uptick. The volume was still rising when the last leg of upswing was witnessed. Let me expand this chart a little bit. Okay. So the volume was still pretty strong. So this, what you're seeing is the volume histogram. Okay. And why I use it, how I use it, it's a pretty lengthy explanation, which I will reserve, which I'm reserving for the technical, for my advanced technical analysis course. Um, um, and what this histogram basically suggests is that the volume was still on the rise when the price was rising, and Not just that, and the volume started declining when the price was declining, which means that the participation or the force is behind the uptrend. So that is one very strong reason why I would expect an uptrend to come. Moreover, the candle that we witnessed on Wednesday, this is a typical island reversal, and the island reversal is a very strong positive bullish reversal pattern. Okay, so the fact that this has been formed gives me hope that the rally will continue. But like I said, there is a possibility of the retest of 19,400, 450 levels, okay, which would basically mean that the price can come back down to retest the high of this pin candle. You call it an island reversal, you call it a morning star, you call it a doji, you call it a pin candle, it's all the same, right? So that's the expectation for the very close future, for the nearby future. Again, if you look at the daily time frame also, the 100 EMA lies exactly at the 19,200 support level, which again reinforces. So this is the third reason why 19,200 is a very important support zone. Actually, it's not a third reason. Technically, the 19,000, the 100 EMA of the daily time frame and 500 EMA of the 75-minute time frame is exactly the same line. It's a mathematical thing, right? So there are two main reasons why 19,200 is a very important support line for us. Okay. So with that in mind, let's move on to the Bank Nifty chart. So this is the Bank Nifty chart, and what can we see here? Firstly, Bank Nifty is taking a strong support at this trend line. There was a, okay, sorry, let's begin from the 3-minute time frame, right? Okay, on the Bank Nifty also, one reason of concern is firstly that the RSI breached the level of 30 on the 3-minute time frame, not once, but thrice. Okay. Why that is significant is if you look at the bull trend, during the bull trend, that does not happen, right? It only happens when the price is in correctionary mode. And the fact that the immediate previous price swing also experienced this low without the presence of a positive divergence makes me a little bit concerned. Okay. Then we can see clearly that there is a key trend line which was also breached on Wednesday. Again, a cause of concern. We'll move on to the 15-minute time frame. So this is the 15-minute time frame. Here, what we can see is the resistance coming in from the 200 EMA of the 15-minute time frame and the 100 EMA of the 75-minute time frame, which is again a reason for concern. Now, if you've been watching my market outlook for the last few weeks, you know that I've been warning against making active positions in banks for quite a while now, right? In the last session, I did witness some positivity on the chart of HDFC Bank. But that being said, banking positions, banking stocks may be fine for maybe some investments for swing trades, maybe for short-term periods. So I personally wouldn't prefer to make positions in banking stocks because I prefer to plan my swing trades in stocks or in sectors where the momentum is very fresh. The momentum is very new, so that I can make 2 or 3 entry exits in the primary or in the strong bull run which is starting out. Banking, in my opinion, is at a position where I can say that the momentum has started to exhaust, right? And I don't want to risk my capital for very small gains, especially in a exhausted sector or exhausting sector, which is what the banks are right now. So that being said, on the 15-minute time frame, again, we can see that there is a RSI negative range shift because even when the prices are peaking, we are seeing the RSI taking strong resistance at the level of 60. Okay. So this is not an indication that the bear market is, going to continue indefinitely, but it is an indication that the bear market is in strength right now. So we need to see a cross above the level of 60 on the 15-minute time frame and sustenance of that level, not of that momentum. Coming to the 75-minute time frame, the 75-minute time frame is pretty strong, I can say, for the Bank Nifty. Nothing negative there. And the daily time frame is also looking better. So on the daily time frame, this little breach that we witnessed, right? This candle, which also looks like a island reversal candle on the daily time frame as well. Even though this happened, right? What concerns me on the daily time frame in Bank Nifty is the volume. Okay. So you see the volume when the prices declined was considerably higher. Okay. Higher than what? This higher basically indicates that the volume of the last 20 days average has been higher than the last 100 days average. Okay. So that's when we say higher, that is a relative or a comparative term. So we need to know what is higher than what. The 20-day volume, the 20-day average of the volume has been higher than the past 100 days average. Now, we know that the primary trend has been bullish, okay? But the last 20 days have been bearish. So, if we are seeing that the average volume of the last 20 days where the trend has been bearish on Bank Nifty has been higher than the last 100 days where the trend has been primarily bullish, that is a cause of concern, right? That is something that makes me feel a little uncomfortable. So that is another reason why I wouldn't be giving any swing trade recommendations in banking stocks to my members, because we primarily create positions between the time frame of 2 weeks to 3 months or maybe 4 months, right? So we want to only create positions in stocks where the trend is expected to be positive for the next few weeks, for the next few months. Banks with this analysis does not look like that. Also on the daily time frame, if you see, Bank Nifty took strong resistance at the level of 46,280 roughly. Now, if Bank Nifty at any point of time comes and closes below this entire zone, below this zone, right? So this zone for Bank Nifty is the equivalent of the 19,200 that we saw on Nifty. This is the 43,500 zone. Okay, so if Bank Nifty comes below this level, then it's a cause of concern. Right now, the resistance on Bank Nifty is 44,800. So you can already see that in my analysis, my outlook is slightly different from for Nifty and for Bank Nifty. I am more bullish on Nifty and less bullish on Bank Nifty. Okay. Now, if you know about the Dow theory, like Dow theory is a very important chapter in the field of technical analysis. In the Dow theory, it is said that before a market is going to top out on the primary trend, there is a there is a diversion between two major indices, in this case Nifty and Bank Nifty, right? And for Nifty itself, my target is around the level of 20,600. Now, whether that's gonna be achieved or not, time's going to tell us, because we can only have so much visibility with our analysis. But what matters is that we need to have a strategy for no matter what Nifty or Bank Nifty do or does. Okay. So so that is that. Let's now move on to the indices chart and take a look at how the indices have done this entire week and where the momentum is, moving on, and what we should do. So this week has been a truncated week. Of course, I forgot to tell that earlier. So Monday was a holiday on account of Gandhi Jayanti. So we have a 4-day week. So what we will do is we will move back, because we want to see how basically actually we'll take Friday into consideration. We will see who has been leading, who has been losing since the last Friday. Okay. So the IT stock has been leading. It is not a big surprise, because IT stocks usually come into strong momentum when the overall market is weak, right? When banks are falling, IT stocks are going up. So IT stock has been the winner this week. I expect, see, if the overall market is going to stay weak, then the IT stock may start coming into momentum. I have a lot of IT stocks in my wait and watch list. Basically, it's the list where, I keep the stocks where I would like to make positions in the next wave of buying, right? Because right now I'm completely invested in the market with risk management, with stop losses set and everything. I literally don't have any more cash. I'm going to have cash if my key support levels get breached. That is my stop losses trigger one after the other. So when my stop losses get triggered and cash comes back to me, or if the rally continues and I start booking profits, then I also need to know which is the next set of stocks that I'm going to start creating positions. So just before this session, I was taking a look at that list for me, and I noticed to my surprise that most of the stocks are IT stocks. So I'm not saying that IT stocks are great for buying right now, but IT stocks are beginning to show some sort of readiness. Okay. So IT stocks may become our choice of sector. IT may become our choice of sector if Nifty breaches key support levels, Bank Nifty and Nifty both, right? Next, we can see consumer durables. So consumer durable is again a defensive sector. FMCG is again a defensive sector. And they are also showing positivity. So there are stocks which I have given recommendation into my Trade Together program members for swing trading with over the next 6 to 8 weeks, which belong to the consumer durable sector, right? Next, we can see the leader has been the service sector, the consumer sector, the finance sector. Finance sector, banking sector, not very far away. Okay, they are kind of in the same gambit, but there are some stocks in finance sector which are giving some positive signals. One of them is Crystal. Okay. FMCG, I've already talked that I am positive in FMCG sector for the next few weeks at least. Bank Nifty, I've discussed. Healthcare and pharma. So healthcare and pharma, I had said around 4 5 weeks ago, that is 4 5 market outlook sessions ago, that I'm very bullish. And now we've come to a point where we've started booking profits. So we booked profits, as you might have already heard, in Lalpat Labs recently. Other than Lalpat Labs, there were a few other stocks which were purchased in the portfolio management accounts that I take care of. And also, in addition to that, there were some recommendations that were also given to members that have done pretty well. So now it is time to start getting out or start trailing your profits in the pharma and healthcare sector more tightly. It is not a good time to make fresh positions in that sector anymore. Okay. Infra sector is, you have to be very stock specific. Metal, auto, infra, and realty, I am not honestly very, very bullish on right now. Whereas the CNX energy sector, I think, is going to really come out as an underdog. And I think some very interesting opportunities are getting formed there. And why is that? So I was studying the chart of crude oil the other day, and I could see that there was a lot of weakness in the chart of crude oil. And you know what the chart of weakness in the chart of crude oil means? It means strength coming back. The reason is that, see, usually for other countries, what happens is that if the crude oil prices falls, then companies, the gasoline supply chain, those companies start losing because the reaction to decline in crude oil prices is faster there, but not in India. Right. So when crude oil prices are expected to decline, then stocks like Supreme Petro in India, then BPCL, HPCL, IOC, these are expected to gain. And I am right now witnessing some good bottom formations there. Now, obviously, we have to wait for a little bit more confirmation because it's a little dodgy. And by the way, crude oil started declining since 29 September. And by the way, this is also positive for Nifty and the overall market. Okay. Crude oil has been rallying a lot, which has also been the reason why Nifty has been in strong correction, right? But now that crude oil prices have started to correct, we can expect some positivity to return to the overall market as well and to the energy sector as well. Okay. All right. So, with that, I have come to an end of this market outlook session. And unfortunately, like I said, today I have a hard stop because I have some commitments. Unfortunately, since I also took a little bit of extra time in doing the explanation because today I feel like I had a lot of ground to cover in this session. I will not be taking any live stock queries, but if you have stocks or positions where you feel you're stuck, where you feel you don't know what you should do, what your next step should be, just take the name of the stock and the cost price and make sure you join my Telegram channel and leave it as a comment on any post. It doesn't matter which post. You will see, leave a comment there. I'll show you, in fact, how to do that. It's really, really simple. Okay. So when you join this Telegram channel, right? So firstly, how to join it? You will go to, you will open Telegram and you will write there, trade with Kavita. Who's Kavita? I am Kavita, right? You join this and you see any post that is made, they have this comment feature, right? So just leave a comment with your stock name and your cost price. As soon as I get some time, whenever I get time, I'll make sure that I analyze and I leave my comments there for you to know your next best action. Okay. So with this, I'll take your leave. Thank you so much for giving me your time. Thank you so much for joining. I will see you again on Monday in my Retail Trader Special Series, which, by the way, I'm starting after a 2 weeks break. So in the Retail Trader Special Series, I bring you one knowledgeable topic because you might have realized that in this session, I have shared a lot of nitty-gritties of technical analysis of swing trading. And in the Retail Trader Session Series, which happens every Monday, I share one topic of knowledge so that you, as a swing trader, can become better. Okay, it's a very simple discussion. It lasts about 20 to 30 minutes, after which also I spend around 15-20 minutes answering your stock queries. So that is the session I will see you at on Monday at 4:30 p.m. sharp, same time, same place. So thank you so much for joining in. Namaste.